The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Monday morning, and hope you had a good weekend. We're taking a look immediately at the Japanese yen. This is something that John from Philadelphia called in last week, just to get right into it. Talked about, what's the best way to trade this. Here's the weekly profiles, and we had, I had talked about the truck up area was around 111.67, 68, but talked about, the dollar not looking exactly as enthusiastic as a trade as this one on the long side. So talked about doing a little bit of a spread, taking an equal sign, putting the yen monetarily on one side and the dollar index on the other, and maybe looking at it from a spread trade. So the yen has bounced 111.67.68. I think we've reached a high already of around 114.17. So 300 pip move in that one. Well, let's go down to the dollar here. I'm going to stay on the same screen. No, I'm not. Let's take a look at this. So where's it at? Here it goes. So not exactly a similar looking chart, but again, the profile is proving to be a great place to pick battles, but I am not super excited about this. Haven't been excited about it following through on the upside, but when we have a daily close above like we had, and then we're kind of spinning around above these daily profiles, you can't be looking at this from the short side as an individual instrument. Now, I still like that spread trade as far as looking at the yen dollar situation on that one. So just wanted to explain a little bit there. Taking a look at gold, we talked about this one, not getting real excited about shorting this until we started having some technical reasons to do so, and we're kind of migrating below that 1235, 1236 area. Now, as we look at this, what do you do now? Again, I think the dollar could, it's got a chance to come down. We'd have to see some migrations below that 1070 area. This is the situation on gold on a daily profile. So your downside targets, if you're going to trade, that's 1218, 1219 down below, and stops above that 1235, 1236 area. Dollar looking kind of strong now, trading above daily profile. So you just got to kind of monitor that situation. We talked about letting gold do its thing first, if that was going to be the case, and it reached a high actually, which kind of saved us some grief, about 1246, 1247 last week. So now opening up pretty much where it closed on Friday, and starting to get some legs on the downside. But what do you do with it now? I think you just got to look at the dollar. If the dollar can kind of get back in that daily profile, then all bets are off on gold on the short side. But right now the dollar's looking like it's got some technical reasons to be strong, and you got to be able to be nimble in your thinking as a trader. Don't get stubborn. I left some puts on the S&P. That was a little stubborn. And there's been this guy is just marching forward, deregulating everything across the grid, and I thought we'd have a little bit more of a political shakeout one way or the other by now, but hey, it is what it is. That's why we left the lottery tickets on in case that happened, and aren't short the S&Ps, just kind of hanging on to one side of that. So taking a deeper look at the S&Ps, still no reason to outright short this up here. And as we look at the 240s, the dailies, the weeklies, there's no new profiles here happening. On the weeklies, dailies, 240s, this is all within the scanner. And I'm going to try to get this started here. We've got a new version of this we've been playing around with. We're trying to release. Let me see if I can get this out here. Here we go. So as you can see, this is the breadth situation on the S&Ps. Nothing happening here either. I mean, these are just flat out mega imbalanced on the upside type situations here. Let's see if we're still waiting for that to load up here. And this is kind of the new look and feel. We've actually got a static chart and a couple other things that you won't have to click so many buttons. And hopefully we might get some betas out of this today, I'm hoping. So here's the 60-minute breadth crossover that happened. What was that? February 8th, just literally launching pad type stuff. I know you're going, well, thanks for telling us what has happened. How about what's going to happen? Let's take a look at our 60-minute. We don't look at this a lot, but this is, again, there's still no reasons to short this. And that's what the profiles do for me. It blocks out one side of the marketplace. Those puts were kind of an attachment to another trade that we did that was a strangle trade that I dismantled a little bit too early. But as we look at this, 23.14, 70, 23.15, that's support now. As you can see, the 60-minute hasn't even had any technical damage here. But I will say this, we got a pretty wide profile on that 60-minute, and it's just amazing that I'm kind of hanging on to that shorter time frame to even discuss this morning. But again, you know, let somebody else figure out where the high is, and then let's get some new information to act on if you're thinking about shorting this particular product. But man, there's a lot of things happening as far as businesses loving the environment that's possibly going to get created and get through Congress. I mean, you know, you've got a lot of things in your favor for a lot of those things business-wise to come through. Taking a look at the VIX. Trading up a little bit this morning. 11:31. This might be delayed, but that's where the VIX is right now. Still 1162 is the big number we got to get above and close above on the weekly. That just hasn't happened in a long time. Crude. Let's take a look at this one. March contract, got a lot of news coming out today. Crude just, you know, I'm just, again, trying to block out one side of the marketplace, still blocking out the short side. So how do you play news announcements? I mean, I'm more biased towards the long side, but if you're going to play news announcements, you got to put your stops in, and those stops should be below 52, 24, 32 in that area. But you got to, you know, if you're going to play an announcement, you got to give yourself a little room to be wrong there. So not a great risk reward up this high, and it might be better just to wait until some news is out before you start playing around with this. And then you can understand that the higher numbers, 54.46, may come into play. That would be support. If we kind of blow up and then pull back, that's going to be your area to look at. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We lost audio. Daggone it. Here we go. We back? Here we go. So just to kind of surf around a little bit, cover some other global indices. We looked at the Nikkei. This is the weekly on the Nikkei, but we talked about that yen being at 111.67.68. That backed the truck up area. I wasn't so deeply convicted about the dollar situation on the 99.60 area that it was sitting on, and the yen sitting on that one. So we talked about a spread trade, yen versus dollar index. But we looked at the, regardless, we looked at the Nikkei index as having a default action with the devaluation of the yen, or that yen chart rallying. That doesn't mean the yen gets stronger. It means the yen gets weaker. On the chart, we look at the let me just quote it here. The JPY USD right there. So we, kind of looked at the Nikkei as a possible relativity type trade, stops below 18,889, and now we're rallying back up, breaking daily profiles. Nice little trade there the past couple of days. You got a resistance area around 19,680 on that trade. I don't see a lot of reasons why it won't get there, actually. So that's the situation on the yen. Let's take a look at the CSI 300. Again, we talked about this one not shorting against this profile here. The POC around 33.96 last week. We closed above, and now we're powering through. Powering through. So 35.21 is going to be your next stop there. Getting updates on the scanners. I don't mind getting them even during the show. You guys are going to love these things. So that's the situation on the CSI 300. Here's the daily on it. Again, just powerful moves in a lot of these global indices. Just amazing, isn't it? How, a couple of months ago, everybody was talking about just everything stuck in the mud. Hillary going to get elected, blah, blah, blah. And then all of a sudden, it's the reflation trade, and everything's just out of control on the upside. Isn't that amazing? You got to be able to change your views. You don't want to get stuck like, Jimmy Rogers' long-term stay in a trade forever type short treasury situation, or short treasuries, as he got taken through the cleaners on. You want to be nimble on your feet, listen to TFNN, get some extra views. Hopefully it'll stop you from doing damaging things to your account, I hope. I think it will. Let's take a look at the treasuries while we're talking about that, just to kind of surf around a little bit here. Talked about this one just not being really anything other than a range trade. So this is the 30-year, getting back up into that unfair high on the daily, 153.18. I think we poked our head through a couple of ticks there. But that's, I said there's really not a lot of leverage in this trade right now, not a lot of direction. That's kind of proven itself to be true for once, something that came out of my mouth. And the profile is just, again, these are things within the scanner. Use them, please. It's just a money-saving event for me to gaze over there and view some of these inflection points. And again, this treasury market, it may be, we have kind of come a long way in a short amount of time, and we need time to kind of adjust positions and everybody kind of get a train of thought that might be a directional trade for treasuries for a while. And I don't think that's going to happen anytime soon. I think it's just portfolio adjustments. So that's why we've been talking about, and this is the weekly here, new profile, boom, had a little bit of a trading opportunity, and we're just going to be range bound for a while. All right. If you guys have any questions about what I'm saying, please call in. I'm just following up on some things we have been talking about. The silver trade, this is it. I'm kind of looking at gold a little bit more so. It's a little bit easier for me to kind of dissect. I'm not a silver trader. Silver obviously caught up that little bit of a rubber band action with gold quickly. But right now, just kind of looking at the dollar to trade either one of those. It's kind of amazing that both gold and silver are sitting around recent highs. I will say that. So again, just kind of looking at the dollar. If the dollar can get back down below 170, I think we might be in business for these things to actually rally again. All right, XLF. Let's take a look and see somehow. Let's take a look to see how some of these bank stocks are doing. This is the XLF. This is where we closed last week. Whew. That's a difficult little scene to short. Let's take a look at Goldman Sachs. Try to figure out some trading opportunities here. Here's Goldman Sachs on the weekly. The dailies, had broken down, but we kind of reversed last 2 weeks ago. There's Goldman Sachs now sitting on the highs again. And again, that was a very short-lived weak stock in a sector that's been pretty strong. So a lot of times we talk about, these pairs trades are kind of difficult, and it's easier for me to see what's holding their hand up early, being relatively strong or relatively weak in the sectors. I like to trade them that way. I think, okay, we've got do we have a caller on right now, Ken? Or is he not on? Just asking a question. I guess he's asking about silver. We just kind of covered that, but I'll just review it really quick. I think this is kind of a difficult trade right now. I'd like to see. I think you don't have a ton of leverage, even though silver closed above its weekly profiles, and so did gold actually. I think you need to wait and kind of look at the dollar. I'm not so excited about trading silver or gold right now. It's kind of nice that they are hanging in there. I will give them that. So that's why it's kind of a no trade for me. Here's the April contract on gold. This is what it looks like. I'm looking at this more than silver, but not coming off a lot here. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So we're taking a look at the British pound now. We're going to grab some currency action. Here's where we're at. This is our daily view. 124.64 is the big number here. Here's the weekly, which is more important here, the 125.39. So it looks like we're trading about, reached high 125.40. It looks like we're trading about 125.23 right now. So what do you do with this? So again, I'm not so excited about being long the dollar right now. And we may come back down below 170. I'd much rather be long the British pound right now, along with, believe it or not, the euro. Did I say that? 105, 85, 86. So kind of sitting around down here on the unfair lows on the weekly. So you got a decent risk reward scenario here in my book. Stops below that area. And what's the upside? The upside 106.93 initially, and then possibly higher. So the dig-in area 105.60 into 105.85. So I don't mind taking a shot at this on the long side on the euro, and I can't believe I'm saying that. I'm not super excited about being long the dollar. This has got usually about at least a 35% relevance, inverse relevance on that relationship. Here's the Aussie dollar. Been a big fan of trying to get long this again after we poked our head above 75.39. Here's the situation here. Here's the daily. You always got to look at resistance on these profiles, no matter what. 76.96. So again, what do you do with the Australian dollar now? Not a big fan of being short this. I'd much rather see, if I'm going to buy it, I'd much rather see either, you have 240 sports, 76.47, and then down at 76.29 on the Aussie dollar. Just kind of let it come to you. I think if we can spin around up here and not sell off and start doing some technical damage, I think we could actually go higher and do breakouts above 76.96 on the Aussie dollar. Let's take a look at the Chinese currency. I don't know if we talked about this. Let me go back to it. The CSI 300, what am I looking for here? I'm looking for 35.21. All right. Right now, we've gotten into some area you've got to pay attention to, which is a big, wide profile. And those inflection points you have to pay attention to, 34, 33 mainly right now. But as we look at the CSI 300, but I'm looking for a much higher move, 35.21. Going back to the Chinese currency, here's the situation here. As this thing climbs higher, we are looking for that devaluation trade on the CSI 300. Here's the daily, but again, I'm looking more at that weekly. Okay, let's get back into something else we need to talk about here before you guys have the opening hit you in the face. Coca-Cola. This is one we've really been kind of pounding the desk at about. Let's get the right time frame up there. All right. So it looks like we're printing about 40.72 this morning. So we talked about targets down below 40.51. Looks like last week we reached a low of 40.55. So your initial targets have been met on Coca-Cola. We've talked about whatever chance you get to short this thing, by all means, do it. It's obviously not participating with any type of market moves up. And if you have any type of S&P turnaround at all, which God knows that that's going to happen, and you start getting daily closes below 40.51, you really will have even more people exiting this trade, and you'll probably start having another leg down. This is a relatively weak stock, folks. Keep your eye on it. Johnson & Johnson. Here's the story here. We kind of met our targets down below 111.96. Then we have to kind of reassess things on this one. Nothing doing here. No reason to trade this from the long side or the short side. Let's take a look at Tesla. And I'm assuming it's up. Voila. Anyway, didn't even have to look at it. So here's the weekly on Tesla. Man, Jesus Christ. Let's just take a look at this. Ooh, that's the weekly. Here's the daily. So, what we've been talking about with this one is, and again, last week we had a close above on our dailies above 256.05, and then it was used that as support to go higher. So Man, I was with a guy in Florida when I don't know if you remember those days. I went down there to trade because it was either go to New York or go to Florida for the lines, or Chicago. I ended up going to Florida because the weather was kind of cool. But there was a guy in the office there in that So's Bandit office, and he had held AOL through like 2 or 3 splits short. Yeah, try to avoid that. This is one, I think David White had been pounding the desk how many shorts were in this. I mean, it's a verifiable fact. What the short interest on this stock is, and it really hasn't given you any reason after we started crossing that 208 border. And again, this is just a little bit of an education for if this type of thing happens again, you at least can block out one side of the marketplace. I haven't been, excited about being long Tesla, but at least it's been something that has not allowed me to get short. So keep this type of technology in mind. And man, I used to feel for that guy. He'd walk in every morning like he was in a pain amplifier. I don't know if you remember when AOL it's like it just went up every day until it went down. And that could happen with this stock at some point, but let somebody else figure out the high print. All right, so international paper. This is one had a big key reversal 2 weeks ago, and then you got to be looking at 5140 as support. I talked about this. This is kind of the in and up trend, finding support like there. Still have a lot of long ideas about this stock going higher. Your initial targets are 54.68. Nice little kind of buy support type trade on this stock. Amazon. So here's, obviously the earnings announcements, and 808.96 talked about that reversing above, and then, back in business here. There were so many. The only thing that was kind of disturbing about getting long there is so many people were considering buying the dip after those earnings announcements, and did never put them in a box over that. So must be a strong stock. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Just looking across some of the news stories here. Let's take a look at the XLE as we look at this. All right, so again, got some crude news coming out. 73.87 kind of closed in the profile. 68.14 would definitely be the back the truck up scene on this one. I think you just got to kind of wait and see on this right now, though. It's just let's take a look at crude really quick. It's kind of hanging out right now. Rather be on the long side than the short side of this. There's so much bearish news out there right now too for crude. Any type of short covering action could be pretty violent. XLF, we talked about this a little bit, but let's look at Goldman Sachs. Let's look at JP Morgan. This is another good example of a 87.38 pre-market, just stock that isn't making new highs with the market here, but definitely not one to short. I mean, zero reasons to short that thing ever, until of course they decide to do the right thing and throw Jamie Dimon in jail. Bank of America, just, man, when you see stuff like this compressing, I mean, you look at this weekly situation, higher lows, higher lows, higher lows. If these banks start getting going again, breaking out again, these S&Ps are going to freaking lose their mind. Let's take a look at the S&Ps again, just to give some updates here. Now, again, a lot of people, a lot of day traders, you end up making, well, historically, I don't know about if you use a exponential weighted average on how much money you can make short in the market, as of what's happened lately, it's not good. But you usually traders love to short things because they get to compress their time frames to stay in the market. When you're a long-term investor, you just kind of hang out and the trade is a little longer cycle. But if you're short in the market, a lot of times, you'll have these violent pullbacks and you can compress the time frame that you're in the market, best bang for your buck, theoretically, blah, blah, blah. So a lot of people fall in love with shorting things. I sure have been a victim of that. And you don't really understand why you're doing it sometimes, but that's really the main reason. And it's also that you're going to possibly get a gold star for outthinking the longs. Let somebody else figure out these high prints on these situations like this. If you're even considering shorting something, you don't have anything as far as profiles go to lean on any of the time frames that we classically look at. So again, if you're kicking yourself that you weren't long, don't try to make it back going short. Again, it's tough to watch this thing go up if you've been waiting to short it, but you will get your day. The market will be open tomorrow. Trust me on that. I lose sight of that sometimes myself. Like, I got to get it back now. But just sit tight, hang out. American Express. This has been a stock that, again, you're looking at financials, strong of the strong, really strong of the strong here. And this kind of proves some of the theory. There it is. There's a daily situation on AXP. We got to reflect back to good old Kansas City wheat. And I want to pull this up because good old John from Philadelphia put this on the radar screen. There's this is you think about it, you get a 30-cent move in wheat from that area. We talked about this a lot, and I hate it when I fall in love with the trade because usually it doesn't work out. But, you look at Kansas City wheat, and this was just, man, wow, zero pain. Kissed the 428.5, and now we're up 30 cents. So, we're looking at, what kind of move is that? That's about an 8% move in 1 week. Here's the daily on it. Man, just great long-term situation here. I'm glad he put it on you guys' radar screen. And again, if you ever hear me falling in love with something, don't walk, run. I'm just kidding. It was a nice setup, and that is something that the den. I mean, we don't really. I don't really get on the pedestal and start pounding the desk too often, but that one, man, just a nice setup there, and thank God he called that in. Let's take a look also. Let's take a look at July wheat. Similar move here. Obviously, those instruments are related, but couldn't play defense until a little bit higher on this one. That Kansas City wheat was, man, incredible. All right, Home Depot, we talked about just blocking out the short side on this one and gave you a chance to get dug in again here on the support. 136.99, 137 met the initial targets. Should have been letting some off there on Thursday, but Friday, boom. Again, this keeps you away from the short side by blocking out the short side. Here's the weekly on Home Depot. We're up, making new highs here. Been a big fan of that. Microsoft, I want to bring this up because, technically we kind of had that reversal back in the box here and kind of got up into some resistance by the close on Friday. So when this happens, you got to watch out for these, and you really need to wait for some closes now back above this area, because I'll just tell you, statistically speaking, when you see these reversals like this, especially back in the fair auction, a lot of times they will be traveled and explored. So, Microsoft hadn't exactly closed right on Friday, and this morning we're trading about 64.15. So still not out of the weeds yet. I'd stay. I mean, we talked about this being a long-term investment way back closing above 53. I still like this as a long-term investment. I mean, I don't see this thing burning anyone. And again, when I start making those statements, run, don't walk. But yeah, long-term investment, you're great, but market timing, I think you need to sit tight on this if you're trading this on any type of intermediate level. Somebody's asking me to comment on oil. I talked about this a little bit already today, but just to review, I like this from the long side. I like playing stops with 52.32, 52.24 on the long side. We're a little bit higher right now. I don't know if that makes any sense, but I'm just, there's a lot of fundamental things out there that says this should go lower. You got the dollar possibly that may come back and start retesting some lower numbers. That's default action for it higher, and any type of short covering could be very violent on crude oil. Be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
So soybeans last week hit that target 1064, 1065 right up there. We talked, I was joking that, yes, I bought some soybean calls. That was true. Around 1020, we backed up there and we explored the whole fair auction. Now that trade's over as far as I'm concerned. Just letting you know as we were looking at that. So let's do a little review. Got about 4 minutes left here. S&Ps, we talked about that. No reason whatsoever yet. Let somebody else figure that part out. Gold continuing to drift a little bit lower. 1218 is your targets on this one. Any type of dollar getting back in the box, which could happen below 1070, back in there would obviously help gold. 1218 and a half is kind of your battle point area on the downside on this one. And you got 1235, 1236 up top. The VIX, the poor VIX, nothing going on yet. Got to get a weekly close above 1162 on this. Would love to see it. And July wheat, we talked about that Kansas City wheat trade. Let's take a look at a couple other stocks that we have to look at. Twitter. All right, so we're trading about 1556 here. I'm going to volunteer to be the CEO of this company. Anyway, 1718, talked about waiting on this one. Just literally no reasons to be long this thing at all. Let's take a look at Netflix. So this is one, you started getting some consolidation above these 100 areas, and we haven't even looked back ever. And you got that profile appearing below price action when we started having the pullback. That was long-term bullish. Here's the daily, a powerful stock in a strong market. Any type of market pullbacks in the scanner. Right now, you're getting a pretty violent move up in the broad market in general. You want to use a scanner to try to clarify, quantify what's not cooperating relative to profiles and what's actually just empathetically getting up to resistance areas that are considered weak instruments. This is not one of those. So again, things don't have to be too high, just like Tesla and a couple other things that we looked at. Taking a look at a couple other stocks that we want to hit. We haven't looked at this in a while. Just wanted to reference it. So again, last couple of weeks, IBM, it's amazing how vacated some of the buildings are in Raleigh, North Carolina on their campus or compound. But they've cut costs. Here's, again, we try to find profiles appearing below price action. That's a good sign, long sign. You got a chance to play defense here. What's it going to do now? Not one to short. Not one to short. Qualcomm. I want to take a look at this one. Looks like we're printing about 54.50 pre-market here. So here's where we're at on Qualcomm. That's the weekly. This is the daily. Talked about this the other day, actually. So 55.14 is going to be your kind of retracement. Let's explore the whole fair auction targets on this one. Might be a short an opportunity there, though. That looked pretty good. Under Armour. Might have now an opportunity here on the long side, actually. 23.20, we talked about those targets. 21.36, be pretty stingy on the shorts here. That's playing with fire. Stay tuned for Larry, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.